In this video, expert trader and founder of InTheMoneyStocks.com and VerifiedInvestingCrypto.com Gareth Soloway makes the precise prediction that a major recession is coming and will affect everyone. To hear him discuss the state of the economy and what to expect in the next months, watch this video all the way to the end. Let's look at the S&P 500 first and see what the charts are telling us. As Gareth says, we are in a wedge pattern, but it is a bearish wedge. He is largely short right now and is looking forwards to the next leg being lowered. He suggests employing mental stops rather than physical ones to prevent getting caught up in algorithms that run your stops. But the true cause for concern should be the upcoming recession. Gareth believes that as consumers' budgets grow increasingly stretched, it will eventually show in every purchase they make. Credit card and auto loan debts have already soared, and within the next 3 to 6 months, a tsunami is due to hit. According to Gareth's prediction, the recession would start in the second half of 2023 and last for at least 2 to 3 years. Investors need to be prepared for a recession that will be considerably slower moving than what the Fed is predicting because it will heat up gradually, like a lobster in hot water. The Fed is unlikely to assist during the first 12 months of the recession due to high levels of inflation, and by the time it is finished, things will be ugly. Gareth forecasts that even if inflation stays at 3%, the S&P 500 won't achieve new highs for 10 to 15 years, and that the unemployment rate would increase to the point where the Fed is forced to act. Watch this video all the way through to the end to prepare yourself. Gareth's study indicates that the chances of a severe recession and a steep drop in the S&P 500 may lead to a short-term bear market for Bitcoin. He believes Bitcoin has the potential for long-term growth, nevertheless, and considers himself to be a long-term bull on the currency. In terms of positioning, he suggests accumulating Bitcoin in the lower area while developing patience and restraint as a trader. Notwithstanding how deep Gareth's analysis is, it's important to keep in mind that before making any financial decisions, you should always do your own study and analysis, because market conditions can be unpredictable and change quickly. It's imperative to keep informed and modify your plan as needed. We are all aware that the current circumstances are not ideal, with inflation on the increase and a potential recession. Regulators' pursuit of risky assets like cryptocurrencies has left people, especially new investors, confused and afraid about what to do and what to anticipate. I'm going to provide some much-needed direction and explanation in this video as a result. In addition to the macroeconomic situation, I'll be looking at stocks, gold, and of course Bitcoin. And I can guarantee that the analysis will be terrifying. As a result, I ask that you please pay close attention to everything. Let's start by talking about the economy. Regrettably, a lengthy recession is in store for us. A significant contributing aspect to this is our long-standing addiction to Federal Reserve quantitative easing. The market is unprepared to withstand a slowdown in growth without the Fed printing more money because it hasn't seen a recession in over 15 years. The second half of this year is anticipated to begin with a recession as a result of rising interest rates. What's worse is that inflation is unlikely to drop below 2% again. If the Fed does not act right now, the market and economy won't know how to escape a recession. It's a challenging situation that most likely won't end anytime soon. What impacts will this have on the stock market? I regret to say that I foresee many unfavorable effects from this. Investors are still too eager to board the bullish train, even though the market has a ways to go before bottoming out. Although there will still be opportunities for investors, it is crucial to play defensive names and look for companies that perform well in both bull and bear markets. Now let's talk about gold. I had been referring to Bitcoin as the greatest performing asset for 2022 and 2023 before to its boom. Gold provides safety in a shaky economy and is an effective inflation hedge. It has performed admirably despite rising interest rates, and if rates are close to peak, gold performance should be outstanding. Finally, let's talk about Bitcoin. Even while I remain very bullish on it in the long run, I see further drop in the near term. Even though there was a bear rally, the danger is still present. Lower lows could soon occur because public perception of Bitcoin and other cryptocurrencies is still too positive. On the other hand, I believe that in the long run, regulation and transparency will be advantageous to the Bitcoin business. What must you do now? Watch attention for significant economic data, such as the employment report and the Federal Reserve's interest rate meeting. Be net negative about the markets going forwards, but keep in mind that they can be unpredictable during downturns. When picking names to play defensively, look for companies that perform well in both bull and bear markets. Don't forget to invest in gold, as it is a reliable hedge against inflation and unpredictability. Please remember to like and subscribe for more carefully curated content. Thank you for watching. Don't forget to share with your family and friends on social media. They might get something and the channel gains a lot. It's not shocking that we're at an odd moment right now, but many people didn't expect it to happen so rapidly. Markets and individual investors were rattled by the collapse of Silicon Valley Bank, Signature Bank, and other U.S. banks a week ago. Following the collapse of the Credit Suisse Bank, similar events are now starting to occur throughout Europe. The US dollar and risk assets often rise when this happens because investors want to put their money somewhere else. In the video you're watching right now, Gareth Soloway analyzes the economic environment in which we're presently living and provides charts to illustrate his suggestions on how to protect and grow your wealth. Please pay close attention at the end because it's possible that this movie and Gareth's plan will change your life. The macro and the financial crash are briefly described below. The S&P futures are losing ground and are down roughly 85 points. The Dow futures are down 626 points, and the stock price of Credit Suisse is down more than 20%, which has led to extreme concern. We'll examine a number of cryptocurrencies today, in addition to stocks and commodities like gold and silver. The typical investor is caught off guard by this, but if you have been following our chart analysis, you are prepared for it. We anticipated this and had a significant number of short positions in our portfolio going into this activity. The difference in net gains between a swing trader and a long-term investor is in the millions of dollars, making swing trading highly profitable. Really, it's that simple, and we're ready because we swing trade. Let's examine a few charts. It is not good news if you own stock in a bank that Credit Suisse is trading below this significant trend line. You run the danger of having them taken by the European authorities when you have a break like this at these low points. It's not a good indicator that we don't know the outcome. Simply be watchful and observant. There you have it, everyone. In the current economic climate, it's crucial to be informed and make informed decisions if you want to protect your wealth and possibly even gain money from it. Thank you for watching today's video, and I sincerely hope Gareth's analysis and plan were helpful. Be composed, stay informed, and make decisions based on common sense. Until then, take care.